Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's continue the conversation with Uber and Lyft to get the read on what's going on here. Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst, joins us now. Mandeep, for Uber, was it they're investing in other stuff, that's why they're disappointing, or is it Paul's fault because he comparison shops between Lyft and Uber?
I think Uber does have a stickier business model now in the sense that people are more used to taking Uber simply because it's become part of their habit. So that price comparison narrative is sort of fading, although it's still, I would say, used by a few subscribers. The overarching question is, how big is this market in terms of the rider base? So what you're seeing with both Uber and Lyft is a flatlining of the new customer ads. And that is a bigger problem because then the market suddenly feels saturated. How do you grow revenue? Do you boost ride frequency or you layer in some other service? And I think the answer isn't that obvious because to an extent, there is a discretionary part to both their business models. Like if I choose to take public transportation instead of Uber, I could do that. And it's just still a nice to have in a lot of the rides that people take. So that's the aspect. I think that's what's driving the guidance and the tapering of bookings growth. And I think investors are reacting.
This is a global, I think about areas for growth. I would agree. I would guess the U.S. market is at or close to saturation. I don't know. Everybody's been using Uber for years now, so you got and Lyft, car ride sharing, but they get almost half of the revenue outside of the U.S.
Yeah.
So what's the call there?
Well, so again, you have to compare it to what will drive the next leg of growth, and to my mind, their take rates aren't going to expand. So take rates are coming under pressure. In the US, there are specific cities that are saying you should give higher wages to the workers. So that debate will always be with these companies. You can never get your way out of, no matter how fast you grow. And Uber announced a buyback last quarter, but I think that's where the regulatory pressure is unlikely to abate. And to my mind, these companies, even though they have an established business model, that ride frequency element is huge. And I just find it hard if Tesla is going to come up with robotaxis, that's going to impact the take rates for Uber and Lyft. I mean, imagine Tesla adding a new tab within their app for ride sharing. I think it's a big risk. I mean, clearly.
You think they're really going to do that?
Elon Musk has said there will be a robotaxi launch on August 7th.
I'm not getting in on that.
So
maybe not today, but your point is over time. That's
and the market will obviously look way ahead of that. And I'm more concerned about the take rates. Right now, Uber's take rates are close to 40% for certain type of rides, even though the blended take rate is close to 30%. But 40% take rate. I mean, imagine what would happen to that take rate if robotaxis come in the equation. It'll be a lot lower than 40% for sure.
But also, I guess But if you do the robotaxi thing, can't Uber then get their own robotaxis and invest, or does that just and then their take rate's 100%?
So Uber has a partnership with Waymo because Waymo doesn't want to deploy on their own network and be in the business of maintaining the cars, so they want to use Uber's network. But Tesla, they want to do everything by themselves. So right now they haven't announced any partnership. I think there's all the more reason for Lyft to partner with a Tesla simply because they're the smaller player and this kind of gives them an opportunity to catch up, which is what Uber seems to be doing with the Instacart partnership, is how can I make my network bigger, even if that means partnering with your competitor. And I do think it's going to impact their delivery bookings in the near term, but still, they want to grow their network.
All right, Lyft had numbers last night, a little better than expected.
That's the
how,
best
how do
way.
you how do you differentiate the call between Reddit?
Yeah,
and
I don't think
Uber and Lyft. Sorry.
it's a question of Lyft gaining market share from Uber in any way. This was more of a case of expectations being really low.
Okay.
And they came out and showed, okay, we are showing some cost discipline. We're not losing any more market share, which was the case for the past 3 quarters, and the stock seems to have reacted 10%.
So to your point, Paul, the opposite of what happened with Reddit. Good IR
Yes.
department.
Yes. Yes.
For example, we were talking earlier with Reddit being hit, or Shopify, I should say.
Shopify, yeah.
Shopify, that the IR department just didn't manage expectations. What's up with Reddit? What do you make of the numbers?
Wait,
Great.
first of all,
Yeah.
what is Reddit? I'm not read in on this Reddit thing. I missed
I mean,
that.
think
claim.
of them as another social media platform,
Okay.
even though
Okay.
social media definition continues to broaden, but they're a platform where users spend 20 to 25 minutes of their time every day. And their daily active users
Is that a
seems to
lot?
be, that's a lot.
Okay.
In the social media sphere. And look, their sequential daily active user growth was 9 million. So they added almost 9 million new users. That's a big number. And their relevance in large language models, that's the biggest driver. Every company that has their foundational large language model needs Reddit data
Right.
to train their model on.
So that was the whole pitch in the IPO, that it was like people are going to pay Reddit to get their users' posts because it helps their language model, right?
Yes.
Are they making money from that? And how much?
Yesterday they called out the incremental traffic they're getting from Google because of that. So a lot of the Google large language model results link to Reddit posts. So they get those automatic clicks because the large language model generates a response that has a blue link to a Reddit post. So clearly that traffic, incremental traffic, has been a big boost for Reddit, and now they are trying to monetize it through ads. But their ad systems aren't as sophisticated as your Meta and some of the other social media players, so that will take them a while to catch up in terms of building their ad stack.
So the Reddit story is just an advertising story?
Advertising
So it's the
story.
same old.
And data licensing. They're
And data
selling
licensing.
their, data. Uh-huh.
All right, I'm not sure I'm buying that, but the IPO bought it. I mean, $34
I
and
mean,
stocks
look at the
$50.
runway. Compared to a Meta, this company has got a lot of runway to add users, to add data licensing. Why wouldn't you buy a social media story at an earlier stage as opposed to a mature stage?
Yep. So where is this? All right, San Francisco. All right, another good San Francisco story. Who's this guy, Steve Huffman, the founder? Is he a player?
I mean, look, the company has been around for 18 plus years, so
Oh,
it's
that's
not.
right. That's right. And now I remember.
You know
Yeah.
who's big on it? John Tucker. He's all over Reddit
All
like crazy.
over the
yeah, he
Reddit.
searched.
He's
What does it do
Redditing.
again?
He's
He's
got
a,
string.
he's hip.
Yep, he's hip.
Like that.
Exactly.
Me on
And-
social media?
I'm
no,
kidding.
ain't gonna happen.
You're not even on the instant message on the Bloomberg.
It's
I
just
know.
dangerous to put my thoughts out there.
I have sent you just like the link of the Met Gala outfits, and he still won't look at it. Mandeep, thanks a lot. We appreciate you. Mandeep Singh, a Bloomberg Intelligence senior tech industry analyst, joining us there.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's stay on that Apple story for a moment. So Apple stock is down by about 0.3%. As John Tucker was reporting, the Chinese iPhone shipments jumped about 12% in March after Apple and its retailers slashed prices. This is according to official data. So what does that mean? What do price cuts actually look like? Joining us now is Anurag Rana, Bloomberg Intelligence technology analyst on Apple's China iPhone shipments. What kind of price cuts? I read the headline quickly and I thought it was 12% price cuts. But what kind of price cuts are we looking for?
See, again, this is very old. Also showed why people are getting so excited about it. I mean, they already reported the quarter in April, and a few days ago, and Tim Cook said that they grew their sales in China. So I'm not so sure why people are getting so excited about March. The big thing is there's an event coming in June. The big question would be whether Apple's going to repeat the price cuts in June or not, because right now everything hangs out on what will happen in the second quarter, because the guidance, though it's good, but if you back into it, iPhone sales will still be down in the second quarter for Apple.
Anurag, can we step back and can you help us just kind of frame out the competitive landscape for the phone business in China? What was it like for Apple several years ago, and what is it now?
So, Apple has been gaining share over the last several years steadily. And it is extremely important for Apple to, do well in China because that is the growth engine. That is the only place where they're going to, show a decent amount of actual number of units growth. However, what happened was Huawei, which is a local brand, had not released a big phone for years because of certain restrictions and other things. And they released a big 5G phone for the first time after a long, you could say, break. What happened with that is people who had those phones early on went in, quite a bit of them increased the sales of that particular brand, while Apple continued to struggle at that time for that particular period only because there was a lot of discussion about not, government officials not using Apple phones, want to use something local, as well as consumer weakness. Apple, for the first time, I would say a few months ago, did unusual price cuts, and which is what we are hearing, led to the unit shipment increase. The big question or the big debate for all of us, including, what we have discussed with you as well, is whether this is a cyclical problem for Apple in China or whether there's a structural problem of people not buying iPhones. We think it's a cyclical issue. Over time, it's going to play out because, you have ups and downs in unit shipments. And if Apple is going to be as aggressive in investing in China, adding more factories over there, I don't see a reason why the Chinese government is going to be against them. But on the other side of the equation, if the US government is very strict with, Huawei and other local brands, they're going to go after Apple. So there is a lot hanging on Apple at this point when it comes to the phone market.
What did you make of the iPad announcement yesterday? I gotta say, it was like the least covered Apple event I think I've ever seen. So they have an AI-focused Pro model. So that was what really stood out to me. And I kind of want to know, did you like it? What did you think of it? And is there a template now that we're going to use from the iPad to then what an AI phone maybe looks like?
That's a brilliant question because I really was thinking on the same lines yesterday that this is an interesting because if they had chip ready for the for the iPad, maybe they're working hard to do something similar for the phone because that's what's going to drive growth for them. Now, as far as the product is concerned, I was blown away. It was beautiful. They're going to have it in my local store on Wednesday, and I'm going to go test it out and see how it plays. Now, the thing that's relevant is Apple iPad really got a boost in FY20, right around the pandemic. That year, iPad sales grew up 34% with a high watermark of $31 billion that year. Since then, the sales have been declining only because you had this massive pull forward in demand because of the pandemic. iPad refresh rate, or typically the years it takes for one to replace it or it goes bad, is about 5 years. So we are really not expecting mathematically this release to do a fair amount of stuff in terms of revenue for this year. For next year, we are expecting that to have a double-digit growth rate for iPad for FY25. So that's really the iPad story. But I think the read-through is if they have an AI chip that's doing, it's performing so well, if something similar to that comes to the phone, I think it could be a game changer.
Oh, okay.
All right, Anurag, I think I'm going out to San Francisco next month for this developer conference. I think that's the place to be. If I go out there, am I going to see an AI, oh, wow moment from Apple, do you think?
I personally think if it is just left for Apple, it's not going to do it. Only because they just started pushing a lot of R&D into this over the last 6 to 12 months. But if they announced a deal with Google that they're going to license some of Google's product to run on the iOS, I think that could make a difference. Now, remember, they already have a very strong partnership with Google on the search side. And I'm hoping for, both the company's sake, because, we have heard like all the trouble that Google has to, overpower all the discussions around search and stuff. If they do a partnership with Apple, it's going to help both the companies, and it's really going to help Apple in order to get a small language model onto the phone that can help me with, a lot of the AI related queries. Now, assuming the hardware is there to support it, I think it helps out both the companies.
Before I let you go, you mentioned that you said the iPad was amazing and yada yada. You're gonna go to the store and look at it. Really? Like it was that cool?
Yeah,
like do Paul and I need to care?
It was. I mean, it is something that, I don't carry a laptop nowadays. I mean, it's only the phone that you deal with. But if you do want a device that is extremely thin, extremely light, and it can take care of all your computing needs, I mean, why not, make the leap and get rid of the laptop altogether? Because remember, the iPad was always supposed to be a replacement for the for the laptop, but it never has occurred. A lot of people use it to watch movies. I mean, that's where it ends usually. But I think I'm going to try to make that leap now.
Interesting. Well, that actually, so I don't have a computer. Did you know this about me?
I don't have one either.
Okay, because you have your phone.
Yep.
But if you could do it on the iPad with a bigger screen,
I have an
easier to
iPad,
work.
but I use it less and less and less and less because I use the phone more and more and more. That's kind of how it works.
Even to work and do all those things.
Yes, the whole thing on the phone.
Interesting. Well,
Hey,
go ahead.
Anurag, can you tell me what Shopify is and why the stock is down 20% today?
Oh, Shopify is one of the most innovative companies that's out there. In fact, I would, I equate their founder to be one of the smartest people that I have seen, from our generation.
Wow.
Very equivalent to,
Glad I asked.
yeah, equivalent to what Steve Jobs was on, let's say
Wow.
15 years ago or so. Yeah, it's a remarkable company. The stock's down today because the guidance is a bit light. So I'm sure all the hedge funds are getting out of this thing, but this is a company I think is going to be there for a very long period of time. I have liked this company for, I think 6-7 years. It's just a phenomenal story.
And
frankly, the software.
I don't use it, so explain to me what they do.
Yeah. So they allow merchants to get online and start, stores immediately. It's just like you can if you are an entrepreneur, if you are a millennial, if you are if you are one of the influencers, you're going to be using their software to sell their products. I mean, this is the next gen company for in what I call digital commerce software. So in principle, they help people get online and sell products. They sell the software, they sell the platform. I mean, it is for the cool people, frankly.
So I don't go and shop there, but any website that I may go to helps me.
Yes.
That's what's helping me do that.
Yeah, it is. If you see one of the coolest websites on your phone, on your on the browser, it's most likely being driven by something that's built on Shopify. So
if I'm shopping on Instagram though, and then I go to a website from Instagram, is that still Shopify?
Yes. So Shopify is one of the very few companies that can integrate with any digital channel. You can shop through your, Instagram, through any of the other social media platforms. If I'm a merchant and I want to sell a product, I can go onto Shopify's platform, create my own websites, billing system, front-end system, back-end system, payment systems. They take care of everything on the back end. All you have to do is have a good product to sell.
All right.
Very cool.
You explained it. Now I understand. All right.
I get
and
it.
this seems like, again, I'm going to reiterate, just a bad job of investor relations, managing expectations, it seems like. Anurag Rana, technology analyst at Bloomberg Intelligence, big fan of Shopify. Who knew? Joining us from that technology capital that is known as Chicago, Illinois. Who knew about that?
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
So one other story we want to focus on here is TikTok. So China-based ByteDance made it clear that it will not comply with a new U.S. law requiring it to sell its popular TikTok video sharing app. And that sets up, guess what? It's all for the lawyers and the judges, a prolonged court battle that basically is going to pit free speech rights against national security interests. And the rumor is that it could wind up at the Supreme Court. So we want to get more data on this. Matthew Schettenhelm is Bloomberg Intelligence media litigation analyst. I just think the fact that we have a media litigation analyst says a lot about where we are in M&A and in big tech growth, etc. Matthew, what do you make? First of all, walk us through what this lawsuit is.
Yeah, so this is the First Amendment lawsuit that we expected TikTok to bring, basically saying that Congress's action violates its First Amendment rights, that it, like any other platform, think about the New York Times or any other media outlet, if Congress were to effectively ban it, that it violates the First Amendment to do so unless Congress can pass a pretty tough test. And so I think this is a pretty substantial First Amendment case because we've rarely seen Congress take such drastic action with respect to such a major media platform.
You know, when we hired Matt, he was just a kid. Now
Oh,
he's
yeah?
got gray hair.
I know.
Put on the Paul Sweeney trend.
I don't know what happened.
Exactly, as a grizzled veteran there. Matt, I know it's important which court these things go to. So tell us where you think this case will be litigated initially and kind of how that might play out.
So this one's pretty easy to figure that out because Congress limited where the companies can sue, and they said any suit can only be filed at the D.C. Circuit here in Washington, which is sometimes referred to as the second most important court in the United States, below the U.S. Supreme Court. This is a court that takes most of its cases actually involve challenges to U.S. government action, usually agencies, the alphabet soup of agencies, the FCC, the FAA, the EPA. But here it's Congress actually taking the action. So this is a pretty experienced court. This won't allow a single judge to go out and sort of make a name for himself with an opinion. This will be a 3-judge panel of very experienced judges, and then the only appeal option would be to the Supreme Court after that.
Does it violate the First Amendment free speech rights?
So I think it's a strong argument that TikTok presents. This is not an easy case on either side. What the court is going to look at is whether there is an important interest that Congress was trying to serve and whether it tried to address that interest in an appropriate and narrow way. Did it burden more speech than is necessary to go after the interest? And one of the things that the government has going for it here is that this is a national security question. I think if this were just an agency, trying to do this, I think that the D.C. Circuit would have issues with the state of the record here, and require it to do more. There's very little evidence in the legislative record about what exactly is the risk and why Congress needed to pursue this avenue versus another avenue. If an agency did this, a court would have issues with it. But this is Congress. This is our biggest policy-making body, and it's on national security, something these judges really know nothing about, and they're going to be very careful about interfering. So at the end of the day, it's a close call, but I give the United States a slight edge because of that deference on national security questions where judges just aren't expert.
So let's just assume that maybe this D.C. district rules in favor of Congress. TikTok presumably would then take it to the Supreme Court. Do you think the Supreme Court would hear such a case?
Yeah, so every Supreme Court case is discretionary. They could say no. I think more likely if the scenario were flipped, I think the Supreme Court would take it. That if the D.C. Circuit rules initially in TikTok's favor, I think the United States would almost certainly get a second chance at the Supreme Court. And that's one of the reasons why I like the United States' chances here, is that I see even if it doesn't go well for the United States at the D.C. Circuit, I think it might go better at the Supreme Court. It gets 2 shots at it. If the D.C. Circuit rules for the United States, I could see the Supreme Court saying, you know what, the D.C. Circuit got it right. We don't need to take it up and say the same thing. So, it's definitely going to be on the Supreme Court's radar, assuming the timing fits. That's going to be the first question, is how do you squeeze all this in on Congress's timeline? By January 19th, we're supposed to have a divestiture. The courts usually take much longer than that.
If Mnuchin gets together as buddies, or if somebody else comes in and wants to buy it, how does that complicate the court case?
Yeah, that's a great question, because for all of this to happen on such a short timeline is almost impossible. And so, I think the court case is going to press ahead. And one of the first things we're going to see is a filing from TikTok giving us its strategy on the timing. Is it going to ask the court to expedite this case? Is it going to ask the court to pause Congress's deadlines to give more time for those sorts of negotiations? We don't know yet. That should come, I think, in the next couple days. Some look at the strategy there. But it's definitely difficult to see how you squeeze both a potential divestiture and litigation in at the same time. I think they have to be going at the same time on two tracks.
Who argues this case on behalf of the U.S. government?
Good question.
Yeah, I would think it's pretty high level attorneys in the Attorney's General office. So the potentially the Solicitor General of the United States, if this goes to the U.S. Supreme Court. This suit named Merrick Garland, the Attorney General, as the defendant. So I would think he would name one of his top attorneys to represent him and the United States in this case.
All right. Presumably we have some good attorneys working for us in the government, I would like to think.
I think this was a David. So David Weston is a recovering lawyer.
Yes.
He's antitrust, but still.
We'll
And years ago, he was like, you know what? Anything is just good for lawyers.
Good for lawyers.
All of this just puts lawyers more job.
Because they bill by the hour, by the minute. Matt Schettenhelm, thank you so much. We appreciate it. He doesn't bill by the hour. We get him on straight retainer. Come on to Bloomberg Intelligence radio show. Matt Schettenhelm, media litigation analyst for Bloomberg Intelligence. He's down in D.C. where a lot of this stuff happens. All these agencies and the litigation arising there. So again, TikTok important. I mean, I don't know how many gajillions of people are on TikTok, but a lot. It's important for the kids. It's important for John Tucker. He's got a huge presence. He's an influencer is what they call him.
I would definitely follow.
So he's paying close attention to this litigation.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm Alix alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We cover all the top news for you in the financial and business world with our great analysts that cover all the industries worldwide. 130 industries and 2,000 plus companies. Let's get more on this Intel thing. So apparently the withdrawal of the license affects U.S. sales of chips for use in Huawei phones and laptops. That's according to people familiar with the matter. Now, the overall decision may not affect a significant volume of chips, but it's really about the U.S. government's determination to curtail China's access to a huge swath of the semiconductor technology. That's why Intel stock is down almost 3%. Michael Shepard is Bloomberg News senior editor, and he's standing by to help us break all of this down. Walk us through the revenue pain that Intel sees from this and the intricacies of what kind of chips they can and cannot sell.
Well, that's a great question, Alex. And for Intel, the company is under some pressure to produce on the turnaround that Pat Gelsinger has outlined to try to get the company back into the vanguard of manufacturing, but here in the U.S. in particular. So analysts are out there looking for any sign of potential trouble for Intel as it tries to execute this plan. And here, even though we're not seeing a significant market for Intel with Huawei, nonetheless, any sign of trouble is something that they have to take into account.
So, I guess the bigger picture here, as you step back, it just feels like this technology Cold War between China and the West, China and the U.S., seems to be just intensifying. Is that the feeling in Washington? Is that where Washington really wants to take this?
Well, Paul, I'm glad you brought it up that way in those terms, because we really are seeing much more of a frost when it comes to technology settling in. The U.S. has been making clear, we heard Commerce Secretary Gina Raimondo just a few weeks ago say technological security is national security, and they are drawing a line when it comes to the more sophisticated and more advanced technology, especially when it comes to computer chips. The U.S. is a leading innovator innovator, if not a leading producer of some of the most advanced and tiniest semiconductors that are out there, powering technology everywhere. And one of the emerging fronts is, of course, artificial intelligence. And we spoke yesterday to House Foreign Affairs Committee Chairman Michael McCaul, who's been pushing for these Huawei restrictions. And he said the idea of the export controls that we reported on yesterday was to keep the most advanced AI tech out of China's hands.
What about tech that's already in their hands that then China can adapt themselves? Wasn't there like a Huawei phone that really scratched everyone's head on like what kind of chips they actually used? I mean, how do you restrict that kind of stuff?
Well, the U.S. is actually investigating what happened with the Mate 90. This device was unveiled as Gina Raimondo was visiting China, and it was taken as a, something that was aimed directly at her during her visit to say that, look, you're trying to put these restrictions in place, we will show you. Now, the U.S. has launched an investigation into how Huawei was able to develop it and whether there are other companies that are forming this shadow network of suppliers to Huawei. In other words, creating proxies that allow the device maker to obtain the chips that it otherwise can't.
So what's the response been from China? Is this going to be a tit for tat type of thing? If I'm Tim Cook, I'm paying attention here.
Well, American technology executives should be watching this space. China overnight responded, calling the moves economic coercion and a violation of what it sees as World Trade Organization rules. And they may very well decide to proceed with the case. At the same time, the U.S. is trying to draw a line around the whole question of national security. And that is going to be something that we see as a tension point between the two countries. The U.S. has made clear that it wants to do business with China, but just not that far. It is only willing to go so far when it comes to trade in more advanced technologies. It wants to preserve the American edge here at home.
How hard is it for Intel to make up that revenue elsewhere?
It's a good question. It's unclear exactly how much they would be losing here. It was only a slight drop if you read between the lines on it. They're now seeing something more to the midpoint of their guidance, but it is still within the revenue that they had projected between $12.5 billion and $13.5 billion.
Michael, we've all grown up with Intel, and kind of, I guess we now consider kind of the older generation of Silicon Valley of technology. It appears that they just have not been able to catch that AI wave, at least from investors' perspective, in any way, shape, or form. Is there any optimism that maybe they can, in fact, pivot their company to go to where the puck is going, which is for AI?
Well, Paul, we all remember the Intel Inside jingle from those ads years ago. And that is something that Pat Gelsinger is really trying to recapture. And he is seizing upon the Biden administration's CHIPS Act, all those investments. We're seeing the company launch plants in Arizona and in Ohio. We just profiled the construction of this new facility in Ohio. It was really impressive. Look inside what they are trying to build there. It's ambitious, but it will take some time too. These plants can't be built overnight, and it is a race against the clock when it comes to AI.
Well, and also as a question, I mean, a lot of the stuff, if you announce it doesn't mean it actually happens. Things get pushed back or pared back. You're going to start off with, say, a plant that's going to do X amount, and then you reduce it to M amount. Are we expecting anything along those lines from Intel? I think there was a great chart on Bloomberg today that showed where chips come from now, and it was an amazing circle chart. Circle chart? They called circle charts? Pie chart. Thank you. Oh, my goodness. Pie chart that showed Taiwan and Korea, and then how in 8 years, and just the diversification was tremendous, and the majority of that coming from the U.S.
Well, what the U.S. is really hoping to do through the CHIPS Act is to get 20% of production of advanced semiconductors done domestically. Currently, that figure is 0. So that is, and they would like to achieve this goal by 2030. That is a really ambitious target, and they're pushing all out to see if they can achieve it. But the European Union also has a similar goal of trying to amp up its own percentage of advanced semiconductor production. And the idea also is as a hedge in the event that China decides to actually make some move against Taiwan militarily. The U.S. wants to be sure that it can produce chips in the event of a severe supply chain disruption, akin to the one that we saw during the pandemic.
Yeah, I mean, that drove home kind of those, I think kind of just brought to the forefront this whole, reshoring or friendshoring for a lot of different industries, including technology. Michael Shepard, thanks so much for joining us there. Michael Shepard, he's the senior editor for Bloomberg News, joining us from Washington, D.C. And I remember that, I guess we all remember that kind of in the beginning of the pandemic when the global economy really shut down. You're like, oh, we import a lot of stuff, a lot of important stuff, and from some places that may or may not be that dependent, I guess, or dependable, and therefore that whole reshoring, friendshoring, and I guess Mexico has been one of the real beneficiaries of that.
Yeah, absolutely. And that's what was so staggering about this pie chart, just to show how bifurcated it actually is now in terms of how much market share Korea and Taiwan have, and then how much money apparently will be poured in. Even like Europe is going to gain some share. Nothing like the U.S., but nonetheless. I mean, the first mover advantage, right? Like, if you put a lot of money into something and you build something now, are you going to go then build a second plant in Europe, or is it kind of a one and done kind of thing when you're looking at billions and billions and billions dollars worth of investments?
And Michael's referencing a piece of work done by Bloomberg News, the big take story of a week or two ago about that Ohio plant and how big that's going to be. And the investment there. So that's a huge investment. But as Michael was suggesting, if you're Intel, the payoff's going to be a while.
It's going to be a while. And that makes it hard for an investor, too, because you're still in a cyclical business with structural change. And I keep going back to that. This is a Brooke Sutherland special, Bloomberg Opinion. You can check her out there. But and how you invest then for something along those lines, and what your timeline has to be like when you're looking at something along a cyclical versus structural world.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm Alix Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news from Bloomberg News, but also the analysis from Bloomberg Intelligence. They cover about 130 industries, and 2,000 companies worldwide. We also keep you updated on all the great enterprise reporting that we do here at Bloomberg. And this one ties nicely into some earnings that we're seeing. So Affirm, that stock is off by over 7%. Now, this is a buy now, pay later company, which from what I hear is literally what it is. You buy now and you pay later. Their forecasted revenue for the fourth quarter did beat average analyst estimates. Third quarter was also strong, yet the stock is down. The macro read, of course, is when these guys do well, what does that say about the underlying economy? Now, luckily, the Big Take addresses some of this. The Big Take is an in-depth story that we cover every day on Bloomberg. And joining us to discuss it, it's Paige Smith, consumer finance reporter, and also Paulina Cicero. She joins us. They're both joining us in the studio. This is about phantom debt. And the quote is, Americans are racking up phantom debt that Wall Street can't track. Presumably you guys did this because Affirm was reporting, and that's part of the phantom debt, right? The buy now, pay later. Paulina, what did you discover in this reporting?
So, at first we were looking at how American households are already carrying about $17.5 trillion in debt. And sometime last year, an economist at Wells Fargo pointed to the fact that there's about $46 billion worth of phantom debt lurking in the economy with buy now, pay later services. And we just wanted to note that that's a conservative estimate. Basically, our reporting looked at how no one really knows exactly how much buy now, pay later debt is out there because, due to some regulatory loopholes, a lot of these providers are not furnishing data to credit bureaus. So while economists and Wall Street traders are making, projections on the economic outlooks based on, how the consumer is doing, we don't really have the full picture.
So, Paige, how big is this out there? When I was growing up, we called this stuff layaway. Now it's pay now, buy, or whatever it is, buy now, pay later. Is it a big market? Do we think it's a lot out there? Are people doing this stuff?
Yeah, so just to go back to one thing that Paulina said, actually, so to be clear, it's not lenders that kind of exist in credit card lenders, auto lenders, et cetera, they're not required to actually report this data to credit bureaus, but they are, it's kind of like an ecosystem, right? Like you want to know what consumer debt is out there. I want to know what consumer debt is out there. Let's provide as much data as possible to the credit bureaus. But I think that's a good question because we really don't know how much consumer debt is out there, in particular the buy now, pay later debt. And that's kind of why this Wells Fargo analyst, Tim Quinlan, kind of, penned this or named this phantom debt.
How does it work? So does it buy now, pay later, is it 0% interest? Do I have to pay a minimum every month? How does that work, and how is it different or similar to credit cards, for example, Paulina?
So typically, a buy now, pay later option will show up in most online checkouts. It offers, most customers, allows them to split up their purchase into 4 installment payments over the course of 6 weeks. So the first payment is due right at checkout, and then the next 3 are due every 2 weeks after that. And they usually offer this with a pretty quick credit approval, and they offer 0 interest rates. So where consumers start to kind of fall into trouble with buy now, pay later services is, one, if you do fall behind on a payment, there are late fees associated with that. And it's not just that. One of the concerns that the Consumer Financial Protection Bureau cited was this issue of loan stacking. So a consumer could take out a buy now, pay later loan on a Tuesday of one week and a Wednesday of, the next week, and those payments will just happen 2 weeks from that time of purchase. And it can be really difficult for consumers to keep track of, when those payments come due, how much they actually owe across, one or sometimes several different buy now, pay later service providers.
I'm looking at your story here, a gentleman, Fabrizio Lopez. He found out the hard way that paying on time won't help them build up their credit score. But on the other hand, the downside is that they fall behind. Not only do they get charged late fees, but they'll also get the loan turned over to debt collectors. So are we seeing more of that, I guess?
I would say it is. It's just, again, it's to go back to the main point. It's challenging to quantify how much of this debt is out there on top of expensive payments that consumers already have to grapple with, like rent and gas and sort of you name it. But yes, essentially, a lot of these companies kind of market themselves as being able to build credit or help consumers to build credit, when in fact the downsides are still there, which is if you miss those payments, those are charged off, and then it's turned over to debt collectors, and you do see a ding on your credit score. But there's little upside in that if you are making your payments on time, like a credit card, you see that reflected in your credit bureau.
Do we know how much they're spending? What the biggest proportion of money is being spent on buy now, pay later, and what they're buying?
So, obviously buy now, pay later services kind of, rose to popularity in the pandemic when people were using it to fund, buying a new wardrobe or new electronics. But increasingly, as inflation has continued to squeeze American consumers, we're starting to see them use them for necessities like groceries. We actually talked to a consumer who used Klarna to split up his grocery payments. And when he lost his job unexpectedly, he couldn't pay those back.
Are there any regulators? Are the regulators looking at this? I don't know who the regulators would be. Anywhere on the banking side. FDIC, maybe? Yeah.
Well,
the Consumer Financial Protection Bureau 2 years ago said that they would issue guidance on whether the industry would be regulated as credit, and Page reported about the OCC, also warning banks that this was a potential risk. But so far, we have not seen any clear regulation on the industry.
Yeah, no substantive new regulation, to be clear, out of the CFPB. But it's been hinted and is sort of on the horizon, potentially.
All right. Thank you,
guys. Yeah. I mean, when I furnished the Jersey Shore estate, I went out. I was going to just throw it on the credit card, and they said, "Oh, how would you feel about 12 months interest-free loan?" I was like, "Boom, hit that."
Definitely
so 12
do that.
payments. That was cool.
That makes up for your 6% 30-year fix.
Yes. Oh, definitely. That evens the books there, right there. All right, Paige Smith, thanks so much for joining us here. Paige Smith, consumer finance reporter for Bloomberg News, and Paula Cacero, personal finance reporter, Bloomberg News. Both here in our Bloomberg Interactive Broker Studio, not mailing in like some people. Actually, today's been a day. In surveillance, we had 6 or 7 people in the studio, including Mr. Clarida. So.
Paul likes to throw a lot of shade at people who don't come in the office.
Yes.
Mostly because I don't think he necessarily wants to be in the office.
No, but I'm here every day.
But he's
every
here.
day, every day.
Drags himself in.
All right, guys, great reporting. You can find that stuff. The big take stories are great stuff. You can read the story on the Bloomberg terminal and at Bloomberg.com/big take. Every day, Bloomberg News comes out with these really deeply sourced and well-written stories on some really compelling issues, including kind of this shadow debt out there.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern, on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.